Okay, hello everyone. Welcome to the International Grain Forum, Black Sea and Danube Weekly Grain Brief. We will briefly recap the next week grain trade, and we will discuss as well the main drivers for this week market. We have huge pleasure to have with us outstanding expert for S&P Global Platts, Vivian. Many thanks, Vivian, for being us and sharing your outstanding expertise. So I would like to ask you to shoot your question in the comments, and Vivian will for sure she will answer, or afterwards we will answer. Thank you very much once again, and Vivian, thanks. Floor is yours.
Thank you so much, Vlado, for the introduction, and thank you for hosting this week's session of the Black Sea and Danube Weekly Grain Briefing. Hi everyone, my name is Vivian Iroanya, and I am a senior price reporter from S&P Global Platts, a price reporting agency with market insights as well. And today I'll be covering mainly the wheat and the corn market, looking at supply, demand, and price trends. Okay, so we can start with the wheat market. Next slide, please. So looking at the price trend for the Black Sea, represented by the milling wheat marker published by Platts, this chart shows the price trend of the milling wheat marker since the start of the season. As of last week, as you can see towards the end of the chart, Black Sea prices have actually been at slightly higher levels compared to last month due to better demand for November loadings, for example, to Egypt. But prices are generally now at a stable level, and there's an expectation from Black Sea wheat traders that prices will remain around these levels for next week. And compared to the current levels, prices around July and August were much higher, as you can see in the middle of the graph, due to harvest delays, logistic challenges, and slow exports, before prices then dropped back down due to concerns about the quality of the new crop for wheat. But there's an expectation from traders that prices will remain for next week at around this current level. The milling wheat marker is currently assessed at 231. And so traders expect the prices to be around those levels. Next slide, please. So moving on to an interesting price trend. This is a comparison chart between the CIF Marmara 12.5 published by Platts and the milling wheat marker, which represents the FOB handy market 12.5. Due to unfavorable weather in the Kerch Strait and high freight rates, coastal prices reached 5 months high, bringing the premium to the milling wheat marker to $19, the highest peak this season. And the freight prices now, however, have slightly come down from Azov to Marmara from $55 to $52 due to much calmer weather. And demand for wheat into Turkey is also falling, with buyers expecting the November load offers to decline. So Platts has assessed the CIF Marmara market around 249, below the lowest offer at 250 and above the highest bids at 248. But this trend shows that millers expect next week prices to sort of the offers to decline, as I said, due to a much calmer environment for the weather and more vessels leaving the Kerch Strait and around the Russian Azov ports. Next slide, please. So moving on to the supply and demand trends, I will be summarizing the planting update for the Black Sea and also the export lags as well. So as of October 7, Russia has currently harvested a total of around 87.6 million metric ton of wheat, with an average yield of 3.5 metric ton per hectare, up from 3 last year. And as of October 10, the winter planting has reached 12.4 million hectares, of a 20 million hectare target, lagging last year. And the Axe Ministry expects a 6% decrease in the total wheat area, which is the lowest since 2014, due to a shift towards oilseeds planting. Meanwhile, for Ukraine and the CBB market, with the harvest complete, farmers remain hesitant to sell, storing the wheat for much better prices later. And as of October 6th, mainly for Ukraine, the planting has currently reached 46% of projected areas, 2 million metric ton, 2 million hectares, down from 50% last year. Overall, the rain forecast should bring some needed moisture for the winter crops. But the planting season, as you can see, for 25, for 26, 27 is currently lagging. And moving on to the export side of things, the S&P Global Commodity Insight analysts are forecasting the Russian wheat exports to reach 5 million metric ton for October, with July and September at 11.5 million metric ton, a huge drop from last year, which was 16 million metric ton of a projected 43 million metric ton. And there's a similar picture in Ukraine, with exports since July being at 5 million metric ton, down from 6.8 million metric ton of a projected 15.8 million metric ton. For Romania and Bulgaria, traders are expecting over 5 million metric ton yet to be fulfilled. And as for exports, as you can see in the two pie charts, Egypt remains the top buyer of Russian wheat, followed by Turkey, Iran, Saudi Arabia, and Libya. For Ukraine, with the EU quota and tariffs in place and good production overall in the EU, Spain has moved to the fourth position as a previously top buyer of Ukraine wheat, whilst Egypt has emerged as number one, followed by Indonesia, Algeria, which continues to avoid French wheat, Spain, and Bangladesh as well. Morocco is unlikely to buy significant Black Sea this season due to a very good French crop. And there is continuous demand for West Africa for the 12.5 from the Black Sea. This remains strong as an emerging demand in countries like Nigeria. But overall, sorry, but overall, traders sort of expect they have the quality of the crop is a major concern for buyers. Um, and that is something to continue looking forward to in terms of how this would affect demand for wheat in the Black Sea. Next slide, please. Now we will move on to talking about the corn market, supply, demand, and price trends. Next slide, please. So on the supply side, while the supply or production from Ukraine is expected to be high, the production from Romania, Serbia, and Bulgaria is expected to remain lower than last year. And in Ukraine, the production is forecasted to increase by 31% year on year. And according to traders from Ukraine, the harvest is progressing with more than 4 million hectares have harvested so far. While in Romania, the production is expected to drop by 3% year on year and 28% year on year in Serbia. And if we look at the current situation, the internal market has more demand for corn in Romania and Serbia from feed producers, limiting the already limited supply to the export market. And recently, with the heavy rains in Romania, this has caused a temporary pause in the harvest of corn in the northern parts, where the good corn is expected. Next slide, please. Now, looking at the demand side of things, if we look at the major destinations for Ukraine corn in the last year, Turkey, Egypt, Spain, the Netherlands, and Italy has been dominating destinations. A more or less similar situation is seen for the CBB market, with destinations like the Lebanon, Israel, and Greece as well. With the growing poultry sector in Turkey, the demand for corn from Turkey is expected to be high this season as well, and it will be fulfilled by both Ukraine and the CBB corn, with Ukraine being the highest share. And so far, traders said that Turkey has already imported around 32 handy cargoes of Ukraine corn for shipments October, November, and December as well. And so, therefore, most buyers of corn are covered for this month now, which is causing a downfall in the demand side, pushing the Ukraine prices down. And this is aided also by the progressing local harvest in Turkey. And many buyers now are turning to the local harvest as domestic prices have also come down in Turkey as the harvest is progressing. But maybe we can expect more demand for January shipments from Turkey in the coming days. However, the buyers and the importers are waiting for Ukraine prices to drop further to make any other purchases. For Egypt, South American corn still remains competitive. However, recently there has been limited availability of Brazilian corn in the Egyptian market, which necessitates the buyers to depend on the Ukraine origin. And some buyers have purchased their first Ukraine cargo this season at 216 FOB levels at the beginning of this month. And another interesting price trend is in the diversity of supply in the EU. We know how Spain, which was once the major importer of Ukraine corn, shifted to the US origin. This trend continues as the US and South American corn origin remains competitive in the market. And with this price gap seen, Ukraine corn will not be competitive in the Spanish market in the near term. However, with Italy and Netherlands, they continue to purchase Black Sea corn. And according to lineup data during the period from July to September, Turkey, the Netherlands, Egypt were the top three destinations for corn loaded from the Ukrainian port. However, in September, corn was only loaded for Turkey, Netherlands, Greece, and Syria. Next slide, please. So the Black Sea corn market has been an expensive origin. And looking at the price trends, this chart shows the prices for the different corn origins for the last 6 months. We can see how the Ukraine prices have come down for the new crop. A slight increase in the prices of the new crop was due to the harvest delay, and now the prices are coming down with progressing harvest and a slowdown in demand. So Ukraine, actually interesting, has reached its lowest level since the start of 2025, just last week. And for POC was purchased around 213 last week, according to Platts data. Yet Ukraine and also the CBB market remains very expensive in the FOB market compared to other origins, which are much cheaper. Next slide, please. As we can see in the competitiveness of Ukraine and the CBB corn market, we can see for the new crop that the CBB market has become more expensive than the Ukrainian origin, and this is primarily due to the freight. Currently, the spread is between 5 to 6 between Ukraine and the CBB market for a destination, which keeps the CBB prices at an elevated level. And Ukraine continues to be the preferred origin due to much cheaper price. But what traders will be looking forward to is with the rainy harvest, with the raining weather, how the harvest of the Ukraine corn will continue. And again, second year in a row, how this will affect the overall production of the corn market. Next slide. Thank you, everyone. If there are any questions, I'm ready to answer them.
Okay, many thanks, Vivian, for outstanding expertise. We used to it from the S&P Global Platts. So maybe we often are getting one question from the Serbia, from the Romania, as we saw from your data and our data from the commodity exchange. Novi Sad, they're just matching. So for the second years in a row, the climate change is affecting the corn yield and corn the quality, and it is decrease in the yield, and because July and August are critical dry season and high temperature as well. And just simple question, how you are seeing the future of the corn in the Black Sea region, because the wheat is going pretty good right now. Do you see maybe the shift in the production toward the wheat?
Yes. So, as you said, the second time in a row that the production is currently being affected, and the dry weather has been consistent for the past years. And what we've heard from several traders is that they are abandoning the corn crop as it's affected by the heat, and also giving the bad yields every year. And this has also sort of led to a decrease in the crop acreage as well. Some farmers have said that they've adopted some irrigation farming, which has given slightly more yields. So maybe moving forward, there could be a focus on irrigated farming and other incentives from authorities that would make the farmers stay harvesting the corn crop. But for the current crop, for the second year in a row, this has been affected by the weather, the dry weather, and the yield has been low from what we've heard from Romania, Serbia, and Bulgaria. And many traders are concerned about the export surplus, that this would be very low, as the corn harvested would actually be needed for the domestic market as well. And I suppose with Serbia, has already reached more than 80% of their harvest, and it will have only a very limited exportable stock. And for the due to the weather as well, the quality has been compromised and is refraining buyers like Egypt from buying Romanian corn. And for Romania, the harvest in the good growing region in the northern side is progressing. But again, with the rain, this has slowed down. Well, we have to see the yields. We are not expecting a huge surplus either for export. And again, Ukraine has to be competitive compared to the other origins in the destination markets.
Okay, thank you, Vivian. I absolutely agree. For corn, we are seeing very rare situation in Serbia that at one time we had like a higher prices than our export destinations. Also, Serbia is net exporter. Usually that's happened this year, and similar situation is with soybean. It's decrease in the yield, not that much as the corn, and sunflower seeds is just a slight decrease. So it is like a huge question within the region. What for farmers, from farmers' angle, what to do, what to produce. So we may expect a decrease in the yields under corn and maybe even under soybean right now. So thank you very, very much. It was just a great pleasure to have you here with us. And if you have some question, please put the question in the comment, and Vivian will be for sure kind to answer all your questions. Thank you very much once again, and thank you for joining us, and looking forward to see you next Monday, same time.
Thank you so much.
Thank you. Have a good one.
You too.